Hello everybody, welcome to another update on the stock screener. People, we need to talk. I think we have an energy crisis and I wanted to get into energy. It is obvious to me that energy is going to go higher. So I took a look at Peabody Energy because they had very good earnings and they were actually amazing. So I bought uh, some shares from this company. So let's take a look at what they do. It's just a coal company. Okay, so they produce coal mainly in USA and Australia. And as you can see here, China needs coal. So coal imports have actually skyrocketed. And I think China will keep on needing that because they're going to build more coal plants, right? So they will need to import lots of coal going forward. As you know, on my website, Correlation Economics, you can go to the 5 crystal balls, and one of them is the oil forecaster. And when you go here, you can open a few of these tabs so that you get a feel of what is happening in the energy space. So let's go over that. Are we having an energy crisis? So net production is actually going down. That's already very good. Field production is actually flat, also going down a bit lately. And this is most important. US ending stocks of crude oil are plunging. This is a sign that oil prices are going higher because there's not a lot of stock left, right? And when we look at, for example, propane, prices are rising. We are at the lower end of the stock levels here. This is production is flat, but demand is rising. And then we go to distillates. Heating oil prices are going up. Highway diesel fuel prices up. Heating oil up. And distillate stocks are far below the average. So there's not a lot of distillate stock left. Production is down and demand is up. So again, very good for the price of energy. Here the prices are going up again. Gasoline, this is at the lower end of the average of stock levels. And production is down. And demand is ticking back up. So looking very good. Crude oil also going up. Again, below the historic average in stock level. Production flat and demand also a bit flat. So basically, we don't have enough oil. And the forecast says that production will go higher, but we will need to see if that will happen. It's not that easy to get everything in production. And the EIA doesn't even know what the trend will be because they say it could go to 180 or it could go to 40. So I think it's going to rise to 100. So the EIA doesn't even know themselves. Here they say that demand is going to go down. I don't believe that. It's probably going to rise with a higher oil price. Okay, so oil rigs are coming back online, but it's still far below the average of the last years. So I think the stock levels will keep on declining. Natural gas is also going up, the production of this, but it's not fast enough, I think, to supply for all the demand that is coming. You can see here, natural gas production is going to be pretty flat. So prices will rise. Okay. Natural gas storage is at the lower end of the average. So all of this evidence tells us that here is the demand for petroleum products is rising. So we have high demand and low supply. We also know that rate hikes are coming. So what is the best commodity to have in a rate hike? These here, all energy. You can see this, all energy. So we need to have at least some energy in our portfolio. LNG demand is only going to go higher in Asia in the coming years, so it's not going to stop. Let's take a look at the palm oil. Palm oil is the leading indicator. And okay, let's take a look at what palm oil is doing. And you can see here palm oil has hit a new all-time high. So oil is just going to keep rising. There is not a lot of palm oil available to mix with the biodiesel, so you are going to see skyrocketing energy. And you can see also mobility trends. Cars are now starting to drive again, so they will need gasoline. Same with flight tracking statistics. Airplanes are now flying again, so even higher than the last 2 years. So this is evidence that they will need fuel. So you can get into crude oil or in coal because both are just following each other, and I chose to get into the coal with Peabody Energy. So now let's take a look at the fundamentals. So these were the reports of the results of the fourth quarter. And when you look at this is the most important number. They have an adjusted EBITDA of $450 million. So if you do this times 4, then it's almost 2 billion EBITDA. What's the market cap? 2 billion. So this company is trading at 1 times EBITDA, which is extremely cheap. It's like coal companies, nobody likes them, but they are extremely profitable. Let's take a look at the earnings. So these are the revenues, and the EBITDA is 444. So what's the EBITDA margin? It's around 40% EBITDA margin right now. That's a coal price of $240. So this was for the last quarter. So that's somewhere here, October, November, December. So let's say 180 coal. And now we are higher at 240. So the earnings from Peabody Energy are going to go even higher than this number. And margins will be around 50% probably. So this is looking good. Now, the balance sheet, we have 5 billion in assets, a lot of cash, and liabilities are only 3 billion. So we have equity of almost 2 billion, which is almost at book value. So this is not an overvalued company. And with an EBITDA of 2 billion per year, they can probably pay off all of this long-term debts in less than a year. Also pay off some of these. So it's looking very good. If the coal price stays above 200, I think that Peabody Energy is a strong buy. Okay. So this is what I wanted to tell. You need to get into energy. It doesn't matter what you buy, but Peabody Energy is a good candidate. Just wanted to show one other thing. Just look at this chart. The top is at 2018 June. Look at this chart. 2018 June had a top. But where's the coal price right now? It's almost more than double this top. And here it is half that top. So something is not right here. Something is not right between this here and this here. So I guess that Peabody Energy will probably at least double from here to get to fair value. Okay, and I'll see you in the next video. Bye.